Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome back once again, Art Jarvis. We begin today episode number 28, or I like the way you put it a couple of minutes ago, 2.2. So season 2, episode 2. Welcome here to Taking Stock.
Yeah, thank you. As always, fantastic to be here.
And so you're doing well.
As far as I know.
You say fantastic.
Yeah. Well, I do. Yeah, I got no complaints.
Excellent.
Right.
Well, I know that you're getting ready to bust out of town.
Yeah, for a
we
little bit.
won't give away any secrets as to where or anything like that. It's not necessary. But anyway, I'll start off by saying, listen, hey, have a safe trip.
Thank you. Appreciate it.
Don't be stressing over that.
Yeah. No.
When it's time to board the plane or get in the car and drive away or whatever it is that you're going to do, you'll be fine.
If it's the worst thing that happens to me, I'm in good shape.
Amen to that.
There you go.
So, anyway, so we're doing well going into the beginning of this episode number 28. We're doing well. How's the market doing?
It was interesting. I listened to the last episode a couple nights ago, maybe, and you asked a question, and I was like, "Oh, the market's down," and I was like, "Well, guess what? This time the market's up." It's very interesting.
Hooray!
So last time we talked, if I'm not mistaken, we were probably in the high 5,200s on the S&P because it had pulled back some. Well, we went through the 5,300s. We broke through the 5,400, which is the number that I used for this year, that I thought we would get to. We actually, for a moment, late last week, we were at like 5,505, and then it pulled back. But right now...
Well, you didn't send me a note on the 55. That's okay.
It was only there.
Pulled back.
It was only there for a nanosecond. But it hit. I'm like, well, here we go. But here's the couple things going on. Number one, it's still all about NVIDIA, right? So NVIDIA split 10 for 1, which, everybody gets all excited about a split when there's, it really doesn't change the fundamentals.
10 for 1?
Well, yeah, it was trading at 1,300, and then it dropped down on what it's at today. It's dropped 13% here in the last few trading days, but which has caused the market to pull back the last couple of days. But today it's up 4%, so guess what? Market's up today. Well,
and for the listeners checking in with us on this episode number 28, and NVIDIA, as you said, we have been talking about it. Episode 26, episode 27, we touched on it. But for those of you who somehow you missed those,
right.
NVIDIA's the big piece of NVIDIA is it is AI technology. Mm-hmm. They make They make They make something to do with it.
They make the computer chips for
the computer chips,
and more specifically, computer chips for the artificial intelligence platforms.
Yeah. Well, so what are your thoughts? We've talked about it, and we've talked about AI. So, what are your thoughts about the impact of AI on the market, but the long-term impact of AI overall? What are you thinking?
I think we talked about this a little bit before. I mean, it's going to be a positive. It's going to help in many industries and a lot of the things we're able to do. Unfortunately, it's going to have a negative side to it also, and we're already seeing the negative side to it with emails and scams and things like that. That all of a sudden the emails that you get that are scams are much more believable than they used to be, right? So that's the downside. But if you look at AI from a finance standpoint, you look at it from a manufacturing standpoint, you look at it from a medical standpoint, it's gonna push us forward. Yeah. The problem is if you remember the .com bubble in the late 1990s, 2000, everybody jumps on the bandwagon, pushes it too far ahead, and then you have a correction. And we may still have some time where this part of the subsector of the markets may continue to move on, but we're ahead of our. When everybody starts calling me and asking me about something, in this case NVIDIA, I know we're getting close to the end, right? I mean, where you're going to have a reset, and then and that's not to say NVIDIA won't continue to do well long term, but for instance, like I said, the last couple of days, NVIDIA dropped 13%. That's a substantial move.
Well, did you see, in terms, still just talking AI for a minute and the impact that it has? So Apple released, maybe made an announcement. I don't want to say released. Made an announcement about their AI. Mm-hmm. And then you probably saw that the Apple stocks shot up.
Which is good because Apple was taking a beating because of that antitrust lawsuit and everything from back in the spring or late winter. So yeah, they've got that. But and there's the thing. So NVIDIA was first guy on the street, big guy on the street, but competition. When there's that much demand, competition is going to start to come in, and that's going to start having an impact on their sales. It's going to have an impact on pricing and things like that. So, but they're still in first place, right? So they haven't caught up to them. The one thing that's interesting is NVIDIA has gone from a much smaller company not that long ago.
Right.
It bypassed Microsoft recently, and it bypassed Apple. And for a minute there, I'm not sure what the 13% drop did to it, but it was the largest stock on the U.S. stock exchange. So it from a market capitalization standpoint, it passed Microsoft and Apple. Yeah. So at least for a moment, it was the largest one.
Well, I don't want to shortchange NVIDIA and the conversation about it, because obviously it has moved up and it's taken its place. And, so we were talking about what's driving the market. And, of course, NVIDIA is part of that technology sector. Right. And so, would we say, here as we talk, what in the heck is today's date?
Today's the 25th.
Yeah, so June the 25th. Yeah. Technology is still driving the market. Would we say that today, right now?
Oh, very much so. Yeah, I mean, if you look at the markets at this moment in time, the Nasdaq, which would be heavily weighted to NVIDIA, is up over 1% today. The S&P 500, which has NVIDIA in it, and it's also a big, from a capitalization weighted standpoint, it's a big position there. The S&P 500 is up over 0.25%. But if you look at the Dow Jones, which is the much bigger, more kind of industrial, or
the Dow Jones Industrial. So
they've done a good job changing it here over the years. It's not necessarily all industrials like it used to be, but it's down almost 0.75%. So that does show you how much an impact technology, and more specifically NVIDIA, who's up 4% today, has on those indexes. So we're, and I think we looked, it wasn't that long ago, we looked, let's say the S&P 500 is up 8% just this year. But if you unweight them, the market's only up about 3%. So that shows you how much of an impact, the technology or NVIDIA has on those indexes.
Somewhere along the line, as we continue to do these, record these taking stock shows and share this information, I'm actually going to learn and understand and remember the whole weighted versus unweighted. But I do know the unweighted tends to be, bring it back to a more reality based. What's the actual increase? You say 3% versus 8%.
Exactly. We're running diversified portfolios, right? Let's say there's 12 sectors in the S&P 500. We might be targeting 4 sectors in there. We're trying to run them, that we think we have growth at the right price. We're going to pay a reasonable price for a certain amount of growth on a stock. But you're going to lag behind a little bit because you're running a diversified portfolio. Our portfolios are not 100% technology, they're not 100% NVIDIA, right? Which is a really bad decision, right? So we're running a diversified portfolio. We're doing well this year, but are we up 8%? Are our portfolios up 8%? Or no? Because we're not. And that was the problem back during the .com bubble. Even conservative like bank investment parts or companies they became so heavily weighted with technology stocks that when the technology bubble busted, people took an absolute. I mean, there are people that lost 80%.
Right.
Just because of how hard the technology pulled back. And these are conservative investment firms, right?
Yeah.
And they just got sucked into the whole technology sector. And that's the problem. You start getting these phone calls like, hey, I see NVIDIA is up 1,000%. Do you think we should get in? I was like, no, I don't think. I think we should have got in before it went up 1,000%. Right? So let it pull back some. We'll take another look at it. So.
Right.
But,
well, so that's the interest. Are you seeing any signs from like the investment firms that that maybe they're being drawn in by not just NVIDIA but by the movement of technology, especially? I mean, I think right now, right or wrong, it's like AI is driving the technology.
Mm-hmm. Very much so.
So whoever those technology businesses are, they're all if they're not there already and out in front of it and part of it, they're playing catch up right now. How do we get in the AI game, and what do we do? So, but are you seeing signs from the investment firms that maybe they're starting to get sucked in, like the boom?
Definitely.
And the bust?
I mean, who has the buying power? It's not the retail investors. It's the big mutual funds and the big investment firms. They're the ones that have the buying power, and by definition, it's supply and demand. So, if NVIDIA is going up 500% or whatever it is, that's because there's that much more people buying the stock than it is, and you're talking about big numbers, and those big numbers don't generally come from individuals. So they're getting pulled in. There's no doubt, and the problem is as human beings, we have a very short-term memory when it comes to things.
Well, while you're thinking. There you go. God bless you. Sneezes are part of the show too.
Excuse me. Sorry.
Not a problem. Well, and I'm kind of glad you interrupted yourself.
Right.
All kidding aside, because it's like you've been doing this for more than 30 years.
Yeah.
Is it more than 35 now?
Oh yeah, we're banging up against 38.
Okay, so you're coming. You're nearing 40 years in the industry, and you've seen it come and go in terms of the boom and the bust in the technology in the 90s. A little bit early on in your career. How do you avoid that if you're one of those firms and you're kind of getting drawn in to the technology excitement? We'll call it the drive of technology on the marketplace. What do you watch for so that you don't get caught in the bust?
Yeah.
What are the things that it's like?
Well, number one is don't get overweighted in any. I mean, you can be overweighted in a sector, but don't get crazy about it.
Yeah.
Right? The other thing is what we'll do is with any stock or any sector or anything like that, any country, we'll come up with what we consider a range of target prices. A conservative one, kind of a middle of the road one, and then our kind of, I'll call it my pie in the sky target, right?
Yeah.
So if it gets to normal, we'll start putting brackets around stocks. And then, if it wants to keep, then the market psychology kicks in. So now you're like, okay, we're past where the fundamentals say we should be. But if the market psychology wants to continue to push those stocks or those sectors up, I'm more than happy to just put a bracket around it, and we just keep moving that bracket up as the stock moves up. But we're pretty structured, and that if it pulls back and hits that bottom side bracket, you'll start to see us taking profits. So that way we don't ride a stock all the way up and ride it all the way back down again.
Amen.
Right? So so it's
that's the thrill of a real roller coaster at an amusement park is not the thrill of the ride when you're investing.
Exactly.
That whoosh down is not where you're squealing with delight.
Everybody loves the peak, but nobody likes the trough, right? So exactly. And again, it's about there's always something out there pulling at you. It was Reddit with like GameStop and all those AMC theaters and stuff like this, and just stocks going up 1,000% with no fundamentals to support it. There's gold. There is whatever. There's always something pulling at you, trying to get you to do it, right? And you start to get the phone call. cryptocurrency. That was, I mean, I was getting 3 calls a day about cryptocurrency for a while there, and I this hyper conservative client who's 80-something years old also wants to put cryptocurrency in their portfolio. Well, maybe not, but well,
I was going to ask. Well, so what happened? That's what I want to know. That's a great story. You have an ultra conservative client who suddenly gets enamored. We'll use that word, enamored with cryptocurrency. So were you able to talk them down off the ledge?
Well, it depends on the client, right? But
okay.
Some clients just like, well, probably not a good idea, probably not a good time, and things like that. As opposed to maybe, okay, we'll take a very small piece of your portfolio and put some in there for you. And but you have to acknowledge the fact it's like you're gambling, in my opinion. You're not investing, now you're speculating. And,
absolutely.
Yeah. So, and there's a difference. But if you want something, you can watch it and you can pay attention to it, and let's say whatever the number is we put in there, you don't mind losing it, then fair enough, right? But I don't put enough in the portfolio that's going to have a great impact on the.
Don't want to destroy your financial future.
Yeah.
Right.
And, the thing is, if it had cryptocurrency, for an example, it continues to go. It bounces around all over the place, but it continues to go up. But that's a psychology thing. That's people talking about how it's going to hit 100,000 on Bitcoin and things like that. But there's no fundamentals for me to grab a hold of to say whether this is a good investment or a bad investment, right? So, I mean, I could tell you I'm not touching it just because I can't make a good investment decision, but that doesn't mean it's not going to go from 60 to 100 just because the psychology of the market pushes it up. So I'm wrong then if I talk them out of it, but it's
well, that's like, to me, I mean, what I hear is there's a lack of foundation. There's a building going up. But what's going to hold it up?
There you go.
It's a lack of foundation when you're talking cryptocurrency.
Very much
I don't
so.
know. I mean, I get why you would look at it. I mean, in terms of listening to you right now and explaining it, you look at it very carefully, very cautiously, and maybe really skeptically.
Right now, yeah. I mean, it's just look at building a portfolio as a pyramid. And you said it exactly right. The bottom is your foundation. Okay, that's your big decision there. That's how much are you in stocks, how much are you in bonds, and things like that. That's your major asset allocation decision. And then okay, now I want to look at these sectors. That's your next layer. And then I maybe want to look at these subsectors or these stocks and things like that. At the very, very tippy top of the pyramid is cryptocurrency and that other kind. That's hey, this is we're doing well and the client likes this and they're interested in it and they want some of it in their portfolio. Okay, well, we can do that, but it's the very tippy top of the pyramid and it's not going to be some great big investment in comparison to the rest of the pyramid or the rest of the portfolio.
Well, reining us back in.
Okay.
Bringing us back around. We started, and I think you covered it well in terms of what are the steps you take. And I think the biggest step is to not get overweighted in one particular sector in terms of worrying about you as an investor individually, your investment advisor, or an investment firm not falling into the trap of the .com bubble that burst all those years ago. So, step number one is just don't get overweighted, and that even applied as we kind of sidetracked into the cryptocurrency story, but it's the same thing. Just look carefully. There's nothing wrong with something being a piece of your investment portfolio.
I mean, my clients or anybody's clients would have been exceptionally happy January through the middle of March if they were 100% NVIDIA, right?
Right.
I mean, it'd been a huge return. But that third week of March where it dropped 33%, also those clients aren't happy, right? And then it takes off again. Now they're happy. And then this week it drops 13%. They're not happy. You're talking, that is very, very volatile, right? I mean, you just, some clients have absolutely no business being in any of it, just because based on their risk tolerances and things like that, they can't tolerate that. They like it when it's going up, but boy, they can't tolerate it when it goes down.
Right.
And I'm not smart enough to tell you what it's going to do on a weekly basis, right?
I understand.
So
And I have no idea. I'm not going to pat myself on the back, but Chuck Gibson, in the investment world, I don't look. I don't look because I personally, whether my financial portfolio can afford, that loss, I can't tolerate it personally. I don't. So I don't want to see. Oh crap! I just lost whatever I lost that day or that week or whatever it is. So, but how do you? So you have clients though, obviously, numerous clients. And they run the gamut from the guy that's like Chuck that says, I'm good. You keep the plan. Keep working the plan. We say stick to the plan. You got a plan. He's got a plan. You're doing it, and he sees the results overall.
Right.
But you must also have at the other end of the spectrum those guys that are like calling you. Those got to be the daily calls, right? That's like, oh my gosh,
I mean, it's people. So you've got the ones who are looking at it hourly, right? And then they've got the people who check it at the end of the day. You've got people who look at it once a week. You got people that look at it when the statement comes at the end of the month. And
Chuck's hand went up. I'm the statement at the end of the month guy or end of the quarter.
That's how
even.
it should be. I mean, there's so much volatility, so much bounce around. You make yourself crazy. And then you have the people that don't have a clue what's going on until I call them and say, hey, how you doing? Just want to kind of give you an update on this is what we're looking for and this is where everything is. And I go, oh, or even worse, something really bad's going on in the market, and I make a phone call just to say, hey, this is what's going on, this is what we're doing, and they go, oh, I didn't even know it. Now they're nervous because they didn't even know what was going on.
I may have raised my hand too early. I might be more than the guy that just looks at it at the statement on the quarterly. Mm-hmm. I might be the guy that if you call me, I'll hear you. But other than that, I don't have any idea. I don't really. The only reason I know anything now is because once every 2 weeks we sit
You're
down,
getting an update, right?
and at the same time, Art, I am as a client and an investor, as an individual investor, I am talking with you about the whole marketplace, and it gives me, in the back of my mind, it tells me a little bit about probably something that's happening within my own portfolio, but I have no idea. I don't really, it's a long-term plan to begin with, and what happened immediately in this last hour or in this next hour is, obviously it has an impact, but, I trust, and people who are listening, this is what we've been saying, get a trusted advisor, whether it's Jarvis Global Investments or somebody else that's, certified and professional investment advisor that you can trust, then trust them with it.
Right. And it never hurts, talk to someone that has an investment advisor that they trust, and they've done,
Sure.
Then you go in, at least it's a little bit more of a warmed up situation
Right,
as opposed to going in cold. I mean, there's a lot of people out there that can talk the talk, but don't necessarily walk the walk. Yeah. And that's where you run into trouble. And it's funny, I was just having this conversation with my daughter this morning about, you pick something, pick an industry, pick a group of people. There's always going to be someone in there that makes life harder for the rest of us. And your goal is to try and avoid that company or that person or something like that. So, but it's a relationship. I mean, there's and I've said this to you before. We sit here and we talk about numbers. We talk about inflation. We talk about recessions. We talk about companies and things like that. This business, if you do it right and you're consistent about how you do things, this business is much more about taking care of people. We get hired because they believe that we're going to take care of them. We're going to do everything we can to try and get them to where they want to be and reach their goals. But if something bad happens, they also know that we're going to be there every step of the way to guide them through whatever transition is and things like that. So, somewhere down the line something's going to happen to me, and I'm going to make sure that there's someone there to take care of my family, right?
Sure.
Someone that and it's someone who we trust. That's what it comes down to, right?
Right.
They might not always be right, but I know that they're going to try and do the best they can every step of the way. There it is. I mean, that's the fun part of the business.
Well, and that, that is a perfect lesson to be taught and to be shared as you just shared it. I mean, just for all things in life. I mean, we're talking about your, individual or family financial situation. But no matter what, I mean, it's, I'm not a mechanic. I shouldn't be doing all of the car maintenance or repairs on my car. Mm-hmm. You find somebody you trust.
Right.
It's in all walks of life. I mean, I think that's
right.
I'm going to call that today's taking stock tip of the day. Yeah. But of course, applying it specifically to your investment and your financial and economic future. Find someone.
Right. Exactly.
If you don't already have someone.
Right.
And Art, I think you said it very well at the very start. If you know somebody and they have, talk to them. Talk to other people. Who are they trusting and what kind of results are they getting? And I mean, your health care, your financial care. Sure. At the end of the day, you just say it's taking care of people. Yeah. Very well said, my friend.
Yeah, very much. I mean, people ask me, hey, car problem, go to this person.
Right.
I need an attorney, go to this person. Like, these people are time-tested and consistent, and trust them. Like you said, you don't want me working on your car, right?
I don't think so.
But I do want someone to work on my car who I trust.
For sure.
If they tell me it's going to cost this amount, I know that it's going to cost this amount.
Hey, you know what? A lot of people here in Loveland, and assume, working on the assumption that a big portion of the people listening to Taking Stock on Loveland Beacon are Loveland people. So there's probably a whole bunch of people in the community that experience the same thing that Sue and I just experienced, finding a new car guy.
Yeah.
Because, and again, here in Loveland, a lot of people went to, and I don't mind saying, Gregory Automotive. Family business forever and ever, amen. Very trusted, good work. You could count on it.
Sure.
But they're gone.
Right.
They closed December 31st, 2023. Yeah. And so what do? You want to find somebody to care for you in terms of your car and your transportation. Well, of course, we asked the folks at Gregory, you guys are closing. Who do you recommend? Who are you passing us off to?
Uh-huh.
But they were so trusted, you felt that you could trust them to also recommend where should you go when their doors are closed. Hopefully investment advisors don't go out of business. Well, and at some point they retire, I guess, right?
There's a reason there's two other Jarvises in this business, and the hope is that it will carry on, right? Yeah. So you don't have to make that decision. Hopefully they become trusted advisors also. Yeah.
Well, tip of the day, find someone you trust to take care of you, to take care of your investments. But we're like in the closing minutes, so that's what I'm saying. That's the tip of the day. Recapping the day. A whole bunch of stuff about the technology driving the marketplace right now. But don't get overweighted. Yep. And don't let don't be calling your advisor say I need to be NVIDIA. Mm-hmm. And then the other thing you just touched on, which is I think is going to be very exciting for the listeners, and it's going to be fun for me as well as. So in 2 weeks, I will be sitting with Caitlin Jarvis. You just mentioned there are two other Jarvises in the Jarvis Global Investments. So Caitlin's going to be filling in for Papa Bear.
There you go.
In 2 weeks on taking. So it'll be Taking Stock with Caitlin Jarvis, and I think we're going to focus on compliance things.
Yeah, I think actually it might be kind of interesting. The whole compliance is actually a big part of the business, and it's not one that I actually enjoy, to be honest with you. So
God bless Caitlin.
She handles the whole thing. She is our chief compliance officer
for
the state. And so it should be interesting. And probably my greatest concern is everybody realizes who the real brains of the operation is. So.
Well, I'll try not to make her look.
Don't make her too bad for me.
We're gonna. Well, Art Jarvis, I don't care if you want to pass off the brains of the operation. It's actually somebody else. You've taught me a lot through these first 28 episodes, and did it again today. And so, as I said at the beginning of today's episode, listen, safe travels, fun times.
Appreciate it.
Enjoy the trip. I guess I'll have you back in a month from now.
Yep, I'll be here.
But in the meantime, thanks for allowing us to welcome Caitlin in 2 weeks in your stead.
It'll be fun. It'll be a different flavor, that's for sure. That's good.
Thanks for today.
All right, thank you very much. As always, a pleasure.
Well, until next time, taking stock with Art Jarvis.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.